Hello guys, the best forex trading strategy is to keep it simple. Now, for you to keep it simple in your trading career, you need to understand these two phases of the market. Okay, so every market undergoes these two phases, whereby we have an impulse, a correction, and an impulse. Now, this is the first phase of every market that you need to be aware of. This is an indication that any market is trending, because for you to have a trending market, the first impulse will be established and the second impulse will break the first impulse, and that's what establishes the higher high and higher low, whereby this is high and this is the higher high. Now, ability for you to understand this tells you a lot of story, that for every market you are trading, the first thing you need to look out for is your first impulse, and after which we have the second phase, where is the corrective phase of the market. And the corrective phase is seen as the ranging market most time, because market can spend a lot of time in the corrective phase before the market shoots high. Okay, so this is the ranging market of every market. This is the ranging market of that market, and then the market moves high. And with this completes, the market also undergo another phase of the ranging market before it starts going up. So this is the simplest concept any profitable trader should know. So what do you need to do? Then your job as a trader is for you to interpret this corrective phase. We position you to catch this move and also catch this move. So it's as simple as that. So irrespective of the patterns you are looking at for, or the indicators you want to put in your chart, price is the king and price action is the way. Okay, so look out for the trend and understand that for every impulse, there will be a corresponding impulse that comes. For every impulse, there will be a corresponding impulse that comes. So how do we drive down this to be profitable? So first, understand what an impulse structure is. So let's talk about some of the impulse structure that you need to know. So the first impulse structure is just an impulse, a sharp move up. It can be 1, and also it can be 1, 2, 3, 4, 5. Okay, so and also it can be in the form of a leading diagonal. Okay, it can be in the form of a leading diagonal, whereby the market gives you a diagonal like this. These are the impulsive move, the first impulse that most times every market starts with. Okay, and also we have seen in the situation whereby the market will just make a pullback, just a three-way move like this. So knowing this within your mind, what characteristics does this thing have? Number one, they are sharp in their move. Okay, so the corrective phase are short-lived, whereby the impulsive phase is fast and sharp. So so that phase drives the market, because that is where a lot of profits are made. So after establishing or seeing this phase, then we begin to see the next phase of corrective structure. So for the corrective phase, basically we have like 3 to 4 different patterns we look out for. We have the corrective regular flat. Also we have a running flat, whereby the market makes an impulse, break high, and also we have an expanding flat. Okay, whereby the first impulse is always coming from down, the first impulse is down, the first impulse is down. So at this, we're expecting a breakout, and we're also expecting a breakout. All right, so these are just the simplest way of understanding every market. So having established this, you can now look in any market to see how you'll be able to identify your first impulse, look out for that corrective structure and trade the next move. Identify your first impulse, look out for that corrective structure and trade the next move. If I should take you to the real market now, this is a gold chart. So if you take a look on this gold, let's see how we can identify a potential trade setup, whereby we take an action based on the concepts we've established: an impulse, a correction, an impulse. Okay, so here now, if we expand this, you begin to see the thought process. That here we've seen an impulse here down, and we see a three-way move correction. Because of this first impulse, we'll be expecting the next impulse to play out. And we have an impulse, we have a kind of a running flat here, and the impulse up. So what do we expect at this point? This was not that sharp move, so we have an impulse kind of, but this one is more kind of impulsive because it's sharper. So we have a three-wave corrective structure. So obviously we'll be expecting a drop, before the market might give us the next potential seller. Obviously, the market dropped as expected. So let's see if we can get another impulse sharp move. Okay, you just follow the market as it develops. Now, as this market is developing, you start watching out for the characteristics of the market. Now, this is an impulse up. Okay, so here I think we are seeing an establishment. So my thought process at this point, this is an impulse, this is an impulse down. So we have 1, 2, 3. So at this point, we'll be expecting the market to break. Once it start breaking this point, we'll be taking a buy because this is an impulse, this is a correction, and that will be the next impulse. So you can see now the market is breaking here. So we're expecting the market to continue pushing high because exactly as we forecasted. So you just follow the market as it develops and see the next pattern. Okay, so at this point, what should we expect? Now, obviously, we've taken a trade here. We've taken a trade at this point, and the market gives us this move. So at this point in time, now I'll also expect the market to keep pushing high because conversely, we've seen this seen an impulse down, we've seen a correction. So as the market develops, that gives you more data. So I begin to see that this is an impulse, correction, impulse. So we are seeing this to be a kind of a running flat. So at this point, we're expecting the market to keep pushing high because it has given us a bigger data that validates the point that this might be a running flat. So here now, we have seen a pattern that obviously the market will keep pushing high. You can see the market actually went high, because we've seen that confirmation at this point. So even here now, we're also seeing, a three-wave move corrective structure, that we recognize, an impulse, a correction. What do we expect? Another impulse clears up. Also, at this point, what do we expect? We just follow the market as it develops. We have an impulse up, is a confirmation that the market is trending down, corrective structure down. All right, so now I didn't talk about this, but there's one they call the contracting flat. Contracting flat most times can be, misleading because you might think that if you come here to break this low, it won't come. But the only way we trade contracting flat is whereby the market actually start breaking the high. So once this market start breaking this high, it will be an indication that obviously the market will keep pushing higher. And the funny thing about contracting flat is that most times the momentum is so strong that there will be a very strong impulsive move. So for you not to miss this impulsive move, we always put a buy stop at this point, and there you go. Obviously, you can see that this market was actually very, very, very impulsive. Now, I believe you'll be able to establish what's the thought process on how we look at the market. Watch the video over and over again, and you begin to see how this thing plays out. More especially the patterns. Look out for the impulse, look out for the patterns, and trade the next impulse. Have that impulse, after the pattern, trade the next impulse. So simple. If you want to learn more about this, you can contact me using the details below this video, and I'll be glad to help you. But please don't forget to subscribe to the channel, don't forget to like this video, and follow us for more content like this. Thank you.